Hi, I'm Nicole Urken, Research Associate for Mad Money, and I'm here with Jim Cramer. We're talking Apple. The market, Jim, continues to rise, and Apple is down 20% year to date, causing severe pain for investors and consumers alike. What do we do here? We're saying the psychology is taking over.
Well, if the psychology really is taking over, Nicole, then what would happen is that there would be a reversal here, and a lot of people are getting out ahead of a Samsung introduction. Right. Samsung's now regarded as being technologically superior. Okay, now, I don't think that's true, but whatever. Samsung's winning the hearts and minds of people. So when Samsung introduces its new phone, that should be the bottom, and Apple would go higher. The problem is that Apple's earnings estimates are coming down. And when earnings estimates come down, until they bottom, until you get the quarterly report, you have one analyst after another cutting numbers, in the same way that you have one analyst after another bumping numbers. So that's the psychology, is one of a vortex down.
So in other words, Apple's caught in this vortex. The valuation call that it's a great buying opportunity has really not played out right now.
Look, yesterday when you were in my office, I said Bethlehem Steel, okay? Yes. Right before it went bankrupt, it was supposed to earn $12 a share and was trading at 24. Right. Well, it lost money the next year. It was selling at 2 times earnings. Well, it turned out to be chimerical. What I'm saying is that if Apple misses numbers, it won't be cheap.
Right, and that's now, very important.
Right.
PE multiples are all based on the EPS
right.
estimates. If those are coming down, a seemingly low PE multiple could actually be high.
Right.
So if we switch to earnings and actually look at the component suppliers that have actually been hurt alongside Apple, maybe when we look at the fundamentals, this actually is an opportunity. Qualcomm, a Broadcom, these have exposure to Samsung as well.
Theoretically, yes. But now, and it's entirely possible, Broadcom started acting better. I feel terrible of, obviously, Action Alerts, we sold it here. Why did we sell it? Because it just seemed like all you got is the Apple side, not the Samsung side. Now, when Samsung introduces the product, I now think there'll be a tear down in the way we used to tear down Apple products, and you'll see Broadcom and Qualcomm. Now, everybody knows that these are in there, but it doesn't matter. The psychology in Samsung is so positive, psychology in Apple so negative, that you're going to get that. But then I think, honestly, if there was going to be a day, and I've not been saying the stock's going to bottom, if there was going to be a day that Apple would bottom, it's the day after the Samsung release, where we then start hearing that Samsung's okay, right, not blowout. And that would be the call to buy a Broadcom, but more importantly, Qualcomm, because Qualcomm owns 4G, right, and has nothing else other than 4G, and Qualcomm's got every base covered.
Okay, so we'll keep an eye out for tomorrow's Samsung 4S or S4, whatever it's called, launch. That could be a bottom for Apple, but more importantly for the component suppliers that are less caught up in this vortex.
Qualcomm would be the one.
Qualcomm.
Yeah.